Hello everyone, welcome to my channel Avanit Academy. This is the sixth problem on reconciliation of cost and financial accounts. The profit disclosed by financial account was rupees 8,900. From the following information, prepare reconciliation statement to find out the profit or loss as per costing books. So, in this problem they have given profit as per financial accounts, that is 8,900, and we have to find out the profit or loss as per cost records. So we'll start the solution. Reconciliation statement, and the columns particulars, amount. First we have to write the profit as per financial accounts and the amount 8,900 in outer column. Now we'll see the items one by one. Number 1, over recovery of administrative overhead in cost accounts. Any over recovery or over absorption of any overhead in cost accounts, it is to be deducted when you take profit as per financial accounts as the base of this statement. So write in less number 1, over recovery of administrative overhead in cost accounts and the amount 1,000. Second one, loss due to obsolescence charged in financial accounts only rupees 3,000. Loss due to obsolescence, it is to be added. So write number 1, loss due to obsolescence and the amount 3,000. Third one, depreciation charged in cost accounts rupees 1,200. Depreciation charged in financial accounts rupees 850. Compare these two amounts. So in cost account the depreciation amount is 1,200 and in financial accounts 850. Means there is a over recovery of depreciation in cost accounts as compared to financial accounts. Any over recovery or over absorption of any charges in cost accounts, it is to be deducted. So write number 2, over recovery of depreciation in cost accounts, and in bracket write 1,200 minus 850. The difference amount is 350. Fifth item, interest on investment received was credited in financial accounts. Interest on investment, it is a pure financial income and it is to be deducted when you take profit as per financial account as the starting point of reconciliation statement. So write number 3, interest on investment credited in financial accounts and the amount 750. Sixth one, loss due to depletion in stock charged in financial account only rupees 6,000. This is to be added. So write number 2, loss due to depletion in stock charged in financial accounts, amount 600. Works overhead under recovered in cost accounts rupees 1,250. This amount is to be added. So write number 3, works overhead under recovered in cost accounts, amount 1,250. Value of closing stock in cost accounts 19,000. Value of closing stock in financial account 17,250. Compare these two figures. In cost accounts the value of closing stock is 19,000 and in financial accounts 17,250. So 19,000 is the more compared to 17,250. Means there is a overvaluation of closing stock in cost accounts as compared to financial accounts and it is to be added. So number 4, overvaluation of closing stock in cost accounts, and in bracket write 19,000 minus 17,250 and difference amount you will get 1750. Okay, now add these 4 items. 3000 plus 600 plus 1250 plus 1750, and you will get 6600. Now 8900 plus 6600. Add these two figures. You will get 15500. Add these 3 items. 1000 plus 350 plus 750. You will get 2100. From 15500 minus 2100, and final amount you will get 13400, and this is called profit as per cost accounts. Hope you got the solution. For more such videos, do like, share and subscribe my channel Avanit Academy. Thank you friends.